When a company reports a strong quarter and stock goes lower, should we be concerned? Or maybe it's a weakness as a buying opportunity situation? That's the question facing St. Jude Med, STJ, the cardiovascular medical device company that makes implantable defibrillators, pacemakers, guide wires, vascular plugs, drug-eluting stents, and heart valve replacements. Until the past couple of weeks, St. Jude had been totally on fire. Stock rallied 72% in 2013, up another 8% year to date. That's because this is a terrific business. The company controls a quarter of the cardiac rhythm management business, and it has a fabulous pipeline of new products that should boost sales and earnings for years to come. Lately, though, the stock's been punished, dropped from $71 down to $67 today. Last Wednesday, St. Jude reported better than expected quarter. 2-cent earnings beat off a dollar basis, higher than expected revenues rose 3% year over year. Company raised its full-year sales and earnings guidance, but some people say it's its prediction for the next quarter was to the downside, which is why the stock went down on the news and hasn't been able to find its footing since. On the one hand, St. Jude has a bunch of new products launching in the remainder of the year. On the other hand, they're seeing some serious competition in the cardio rhythm management business. So is St. Jude a buy into the recent pullback? Let's take a closer look with Daniel Starks. He's the chairman and CEO of St. Jude Med. Find out more about the quarter and where his business is headed. Mr. Starks, welcome back to Mad Money.
Booyah, Jim. Thank you very much for having me on your show. I feel very privileged.
Thank you, Dan. First, you've made two acquisitions. Both of them, I think, are going to substantially change the St. Jude Med that we think of right now. Can you give me what the company looks like in 2015 versus right now?
Well, our goal, we're not giving guidance yet for 2015, but in 2015, we expect to have the benefit of a number of new products that we look to help accelerate our sales growth on a sustainable basis. The most important of those new products relates to one of our recent acquisitions. That's our acquisitions of CardioMEMS. And CardioMEMS is a potentially breakthrough technology to help physicians reduce the level of hospital readmission rates for a very large population of heart failure patients. We have very significant clinical evidence that demonstrates that with the benefit of our technology that is available only from St. Jude Medical, that we can reduce the level of revolving door hospital readmissions for a certain class of heart failure patients by as much as 37%. So this is something that is good for patients, it's good for payers, it's good for healthcare economics all around the world.
And that's in part because right now you have to, if you're a hospital company, you're worried about the penalties if you don't get that reduction, right?
You're exactly right. Medicare, and we expect private payers to follow, has a program specifically designed to penalize or reward healthcare providers depending on the relative readmission rates that healthcare providers have for a class of diseases, the most important of which is heart failure. So not only is this technology good for patients, but this technology is very significant for healthcare providers in the United States because of the Medicare hospital readmission reduction program that provides for a very significant penalty of all Medicare reimbursements for that healthcare provider if that healthcare provider readmits, has less success keeping heart failure patients out of the hospital. And that's exactly what our technology is designed to do. It's designed to help healthcare providers keep heart failure patients out of the hospital by staying ahead of the disease in a way that helps the patient feel better, as well as helps reduce the number of times that a patient with advanced heart failure returns to the hospital.
I think it's just gigantic for St. Jude. Now, I have to ask you, as I discussed this with my friend David Faber in the morning, St. Jude already got hit by the excise tax, which was unbelievable that they had an excise tax for devices. But do you feel disadvantaged by the fact that Medtronic is changing its tax regime by buying Covidien, while you're playing by the U.S. tax regime?
Well, we're sympathetic to the dilemma that Medtronic had and to the problems that Medtronic is attempting to solve with the maneuvers that it recently has made public and with this inversion and becoming a foreign corporation rather than a U.S.-based corporation. We're sympathetic to those problems. Anytime one taxpayer reduces its tax burden through a maneuver that may reduce taxes, we always are concerned about increasing the burden on the remaining taxpayers that are continuing to pay a full share of taxes. So it's a consideration for us. But I think the bigger issue is the U.S. corporate tax policy generally. It's because of such a burdensome. We have the highest corporate tax rate in the world. It's a significant disadvantage for every U.S.-based company. Medtronic works to improve its position by becoming a non-U.S.-based company. We won't do that. We'll continue to be a U.S.-based company, but we'll continue to work through the appropriate channels to help develop U.S. corporate tax policy that makes more sense, that increases the number of jobs that we can help create here in the United States, that helps us continue to improve the volume of exports. We're one of the leading exporters. The medical device industry in the United States is one of the leading export industries. The last number I saw was we have a favorable balance of trade to the tune of about $46 billion. This is an industry that should be supported, not an industry that should be penalized with high taxes, not to mention the additional burden of medical device excise tax.
All right, I totally agree with you. Dan said the same thing to the Secretary of Treasury last week. I want to thank you so much. I think the company looks terrific for 2015, which is the way our investors should be thinking about. Thank you so much, Dan Starks, Chairman, President, and CEO of St. Jude Medical. Booyah, sir. Thank you for coming on.
Thank you.
Very rarely do you get this stock at a discount. This is one. Think 2015, people. Don't think about the next month. Think about the next year. It's real good.